All right, let's get started. My name is Mr. Leong, and I have a business scoop for you. Some interesting news has been going on today, and it had a ripple effect in the financial markets. The Fed has said that they're going to raise the interest rate sooner than you think. And this had effects on the stock market, oil dropped, and raising interest rates is a contractionary monetary policy. For those of you that don't know, interest rates are a sort of mechanism in which we either contract or expand the economy. We keep interest rates low in order to help stimulate the economy, make it easier to borrow and, access capital, and we raise interest rates to contract the economy. Now, the Fed has said that they're going to raise the rates a little bit earlier than expected. And they expect to raise the interest rates in 2023, according to some new economic projections. And that seems to be not what many investors and people in the financial markets expected, because they would expect that the interest rates would stay near zero for at least the next 2 years. However, they expect to raise interest rates in 2023. Some individuals, part of the Federal Open Market Committee, said that they are in favor of raising interest rates as soon as next year. And there are some indicators in the economy that suggest that we need to kind of keep an eye on things. First of all, inflation is very high. When you look at the products in the grocery store market, meat prices are high, food's expensive, transportation, oil. So costs have gone up, inflation is going up, and because the economy is expanding at such a high rate, this has driven costs up quite significantly. There's also been very high GDP growth, 7% in 2021, up from 6.5% in the March projections. With strong growth and strong economic activity, it's good, but if we do it at a rate that's unsustainable or too high, we get something called inflation. And this is where prices go up, and this makes sort of our dollar be able to buy less as the prices go up and up and up in the future. So maybe $10 today, cash, would buy less in the future because of high inflation. And the 3.4% is well above the target of 2%, which is ideal for economic growth. But the central bank is suggesting that the burst of inflation is going to pass, that's only temporary, and the forecast for the 2023 inflation, are barely budged higher. But in its policy statement, it's noted that inflation has risen, but stressed that this largely reflects transitory factors. So because of supply chain bottlenecks, shortages of products, this has made the prices go up, but not necessarily because of something that we shouldn't be too concerned about. So that's their opinion about whether we should raise or lower the interest rate. But a lot of these costs are going up because of a lack of supply. Demand's very strong. We're coming out of the post-pandemic recovery. Incomes are high. We have stimulus. We have money to spend, and with demand pushing prices up and costs going up because of supply chain bottlenecks, obviously we're going to get a situation where costs are going to go up. So that's the business scoop for now. Job markets are doing well, but because of the increase in the interest rate, this means that stocks are going to go down, and that's how they responded. They ended the day in the red. Dow was down a little bit, about 0.8%. S&P declined about 0.5%, and Nasdaq 0.2%. Higher rates are potentially bad for stocks down the road, because as the interest rates go up, this makes borrowing more expensive and could decrease profits, because you're spending more, businesses are spending more money on interest, because of the cost of borrowing debt, as this is a contractionary monetary policy. Okay, so that's a business scoop for today, and that's what's been going on in the market. If you're interested about why stocks are down and oil is down as well. But if the Fed stayed a course and kept the rates pretty low, near 0%, it's good still, but something to keep an eye on definitely in terms of the interest rates. Okay, thanks for watching. This was the Business Scoop, and I hope you enjoyed learning about what's going on in the economy. All right, I hope to see you in the next video. Thanks for dropping by, and I will see you later.